So far we have seen the constitutional framework related to GST, the taxable event under GST, which is supply. We have seen the different nature of transactions which are liable to GST. The question which arises is, where should I pay GST and when should I pay GST? So they have introduced provisions which are referred to as the time of supply. That tells me when I should pay GST. And place of supply, this tells me the location where I should pay GST. So let us first deal with the time of supply. So time of supply is the event when supply happens. That will also give rise to my liability to pay tax or the liability to pay GST. Why is the time of supply required to be determined? When the assessee must pay GST, when the assessee must report the transaction in his statements or returns, if there is a change in rate of tax, it will determine the applicable rate of tax at that point in time. And when do I have to raise an invoice? For every taxable transaction, I will be mandated to raise a tax invoice. So all those who are required to comply with the provisions of GST, the time of supply therefore becomes very important. The time of supply has been prescribed in various provisions. What I will seek to do is only speak about the general rules regarding time of supply, which will apply in 90% of all cases. In certain specified cases, they have provided specific rules, but I will deal more with the general rules because this will give you a basic idea of GST. So, under the GST regime itself, let us divide supplies into two forms of supply. One is a supply of good, two is a supply of services. What is good is any movable property is defined as goods. I can see what goods are being transacted. So the definition of goods is very simple. Service is anything except goods. Therefore, to understand what a service means, as long as I rule it out of the definition of goods, it is a supply of a service. Different time of supply have been prescribed for goods and services. Let us look at that. So the time of supply for goods is either the date of issue of invoice or the last date on which the invoice is to be issued, the date on which payment is entered, or the date on which payment is credited to the bank account of the supplier, the earliest of these dates. So let me understand any business transaction. In any business transaction, how does a transaction take place? Let us say I supply goods. Along with the goods, I might issue an invoice, or I might get a PO, I might get payment in advance, and after that I might supply the goods and issue an invoice, or I might get part payment in advance and I might get the remaining payment after the goods are supplied and the invoice is issued, or I might supply the goods today and issue an invoice after 10 days. So what they are saying is earliest of any of these events happening, that is the time of supply. And when the time of supply arises, your liability to pay GST also arises. Similarly, for the supply of services, either the date of issuance of the invoice, the date of provision of the service, if I don't issue an invoice within the prescribed time period, the date in which payment is recorded in the books of account of the supplier, and if none of this applies, the date on which the recipient shows supply of services in his or her books of account. So the earliest of these dates will be regarded as the time of supply under GST. There is something called a reverse charge mechanism. So today, if I supply goods, the liability to pay tax is on me. Under VAT, in all cases in supply of goods, the seller or the supplier will be liable to pay VAT. Under service tax, there was something called a reverse charge mechanism in certain cases. In certain cases, it was not the provider of service who was liable to pay service tax, but it was the recipient of services who was liable to pay service tax. How many of you in the course of business have either imported services or received services from a GTA or a goods transport operator? Have any of you had that instance? So when you import services under today's regime, the recipient is liable to pay tax under the reverse charge mechanism. When I receive services from a GTA in certain instances, the recipient was liable to pay service tax. So in all these cases, where the liability to pay tax, which is normally on the supplier or the seller or the provider of services, is shifted to the recipient, that is referred to as the reverse charge mechanism. Now, in case of reverse charge mechanism, a question equally arises as to what is the time of supply. And these are the provisions which will govern the time of supply under reverse charge. But most of us will be under the forward charge or the regular supply mechanism. So I think we'll just go over this slide. Now, this is in case of a transaction between associated enterprises. Associated enterprises are normally enterprises which are related to each other. What normally happens in these cases are that the normal business practices are not followed. It might be that the accounting happens over a period of time and not per every transaction. Therefore, specific provisions have been incorporated in the law to say that once there's an entry in the books of accounts of the recipient of supply or the date of payment, whichever is earlier, that shall be regarded as the time of supply.